those chips in, and they're going to try to prosecute you. Imagine that. And here they are cheating the entire time, cheating the absolute entire time, guaranteeing that you have all the odds against you. But when you start winning, oh, no, you're a cheat. We can't have you here. You got to go. The market doesn't like hard counters either. And when you know, they make it a little bit harder for you. I'll just say it that way. Okay. So what you want to do is learn what it does, how it books price, and then casually grow over a period of time. Don't flash in the pan, go out there and try to run it up real quick, because all you're going to do is put a spotlight on you. And that will start being a problem for your trades. They'll slip you, they'll requote you. Other things that I'm not going to talk about here, but same treatment as a card counter, let's put it that way, but just in a different approach. So if we can agree, just for the sake of this discussion, just if you don't believe there's an algorithm, let's, for the purpose of me explaining something to you, just pretend for a moment that you do believe it is, okay? And then at the end of the conversation, then you can move back to whatever you want to believe afterwards. But if there is an algorithm and it controls price and it only affords the market to go so high or so low for that given day, that means from the time it starts trading to the time it settles for that session, all of that price fluctuation, everybody in the retail perspective are all going to see it as random price delivery. And there might be a pattern there that may justify them taking action on it. So they have a religious belief in some kind of pattern. For the sake of the pattern, they're going to buy or sell. And I'm trying to offer you a different perspective where you should be thinking, okay, what is the prevailing market sentiment right now about that given market? Is it likely to continue higher or lower for the next several days, up to the whole duration of the new week coming? Okay, because right now while we're talking, it is 40 minutes after 10 a.m. Eastern time. So we have several hours before we get to the new week opening at 6 o'clock Eastern time. So the markets are flat, they're not trading right now. And you should be thinking about what that monthly, that weekly chart is doing. Would seeing the price dropping lower to an old low or a gap of some sort, would it be beneficial for smart money if they were short? Would it be beneficial based on what that monthly and weekly chart shows right now? Would it be beneficial if the market was likely to go higher if smart money was long, to go to an old high or go to an inefficiency above where we settled at on Friday? That's your first question every single Saturday or Sunday, or if you do your analysis in the Friday evening or whatever. But before Sunday's opening, you need to do some reflecting on the monthly and the weekly chart, because it should give you a long-term slow expectation where price is likely to go. And if it's not obvious, then drop down to the next lower time frame, which is going to be the daily. If you can't ascertain where the market's likely to draw to on the daily chart, then you absolutely have no business dropping down into the lower time frames, because you will be gambling. You will absolutely be gambling, because you won't know, trading on these smaller time frames, when that next trade you're taking is actually a higher time frame entry that's going to be the biggest displacement. And if you're trading without a stop loss, which I see a lot of that, just look at the screenshots everybody's tossing around between